Mike Butcher here with TechCrunch, and I'm here in the offices of Nutmeg, which is a new financial startup here in London. But the story behind Nutmeg is quite an interesting one. Here I have Nick Hungerford, who's the co-founder and CEO of Nutmeg. Sorry.
Hi Mike.
How are you?
Very well, thank
Great.
you. Great. Thank you for coming down.
We're here in the depths of seedy South London in an industrial estate. I had to walk from the local tube to get here. But it's a very interesting background story to Nutmeg, isn't it? First of all, let's just hear a little bit more about, firstly, what it does, what it is, and then we'll get into the background.
Sure. Nutmeg's the world's first fully online discretionary investment manager. And although that sounds very complicated, it's a really simple idea. We look after people's money, we help it grow, and we help them meet their financial goals. And we try and make sure that we do that with as little risk, as little volatility as possible.
So you're trying to kind of disrupt the whole financial advisor space?
Yeah, that's exactly it. For about 300 years, the financial advisor, the wealth management space has been exactly the same. It's one-on-one selling, only looking after very rich clients, lots of golf, and then no transparency, no control for the individual over their money. And money is a very personal topic. It's something that people take extremely seriously, and yet they have no information about how it's managed and how it's run. And we want to transform all of that. We want to give the power back to the investor. We want to do all the hard work and make it straightforward. But we want to change this industry and have it product-led rather than sales-driven.
Okay, well let's get into some of the background behind this. So you had this idea originally in the US, correct?
Yeah, I was studying at Stanford University, where I was doing an MBA. And sorry, it's going to be all over the noise.
Just ignore the kitchen. Keep going.
Studying at Stanford University, where I was doing an MBA, and it was just puzzling to me how lots of my classmates would come up and say, you know, look, I've got this £100,000 to invest as part of the signing-on bonus that I've got from my private equity or consultancy job. How do I do it? And these weren't just smart people, but they were also people who had been taught for a couple of years about investment, about finance. And I began to think, you know what, finance is just a theory. It's not a physical good. It's not like this table that either you can have in your house or I can have in my house. Surely there is a way of distributing this theory to everybody, regardless of wealth. And it becomes very clear, you know, there is no reason why only very wealthy people are allowed to invest on great terms. It's just a pure fact of the industry being a one-on-one sales machine. So we set about to solve one of the biggest problems that I think needs solving in finance, and that's the elimination of friction, elimination of transaction costs. Because if we can eliminate the transaction costs, we can provide great financial management to people with all levels of wealth, i.e. the commission isn't eating up the returns for the smaller investor. So started in Silicon Valley, spent 6 months living the entrepreneur's dream, working out of a friend's garage and living in his spare room. A very, very generous chap.
Must have been tantalising prospect to launch something like this in the US then.
Oh, it was. It was something that everybody was telling me they wanted. The VCs that we spoke to said that they needed it themselves.
Because there's also been similar kind of startups in this space, like Mint, for instance.
Yeah, Mint was a pioneer for financial services startups. I mean, they really showed everybody that it is possible to create something new in this space, that you don't have to be 500 years old in order to gain trust and actually add value to customers. So we take great heart from that, and also from the influx and creation of what is now so many financial startups, both here and in the US as well.
So why did you not stay in Silicon Valley?
Well, I was originally attracted back by a delegation from UKTI, the Global Entrepreneurs Programme, who persuaded me to come and have a look at London. And really their logic was pretty simple. London is the #1 centre for finance in the world. You're going to find the best financial talent here. Engineers are cheaper and often in greater supply than in the Valley. So the combination of those two things, you know, being a centre for financial expertise and the talent available, got me over here. And then I took a look at the strategic perspective and thought, okay, where's the bigger market? Well, the US in whole is a bigger market. But of course, each city, San Francisco, Miami, Dallas and Seattle, they're all very different. Whereas London is a concentrated city full of educated people who are high internet users and make big purchases online. You know, they buy their travel online, they shop for wedding gifts online, and they bank online, more than any other country. So from a strategic point of view, with a quick passport into Europe, great talent, a big market, a favourable regulator, and a government out to encourage entrepreneurship, it all made sense.
So you launched properly last year, and you also announced your funding. You've got some pretty big backers.
Yeah, it's very exciting. This is not a business that can grow massively quickly straight from the off. It took a good year to build our infrastructure. We need to get fully authorised by the financial regulator. We need to work with a custodian. We happen to work with the biggest one in the world, Bank of New York, Pershing. They trade around $7 trillion worth of instruments a day. That took us a long time to get that deal, for them to talk to a startup like us. But we needed the safest place for our client assets. And of course you have to build a platform that is smooth, empathetic, and really people can relate to when they're giving you their money. So it took us about a year to get it going, and then in April of last year we secured it.
Right, so you were just telling us about your backers?
Yeah, that's right. So we brought on Tim Draper, fantastic investor, Hotmail, Skype, Baidu, Tesla, in the very early stages with Pentec, a UK VC, been around for a long time. And then last year we brought on Daniel Agata, TradeX Systems, 5.6 billion exit, and Klaus Hommels, who we know runs Lakestar, VC firm. And most recently we've been able to announce that we've taken on some investment from Todd Rupert, who was formerly CEO of T. Rowe Price International, one of the world's largest mutual funds, so a real expert in the space, and it's his first investment. And in a couple of weeks we'll be announcing some new investors who are extremely impressive, world-renowned financiers as well. So all in all, extremely exciting for us.
So how many people have you got here now?
Got just over 20 full-time at the moment, and looking to expand, so please do check the job section of the website.
Right.
But it's definitely a growth phase for us. We've been seeing a huge uptick in demand.
What's the competitive environment like?
It's tough. I mean, we're going through ISA season at the moment, so you're going to see posters everywhere for people who want to look after your money. We have to just make sure we get the message through.
But I mean in tech as well.
Well, I mean in tech, of course. I mean, lots of startups starting here in London, so the competition for talent is extreme.
Who do you consider your main competitors?
For us, it's going to be people like Fidelity, Hargreaves Lansdown, who are taking a share of wallet from people who are looking to invest. They just can't do it as well as we can.
But they don't have a technology platform in the way that you have.
No, they don't have a technology platform. They don't have the user experience. They don't have the full service customer service operation that we do for a discretionary management online platform. And that's what makes us so special.
And I mean, is there a kind of a wider ecosystem you can build around yourself, such as with third-party apps or with mobile as well?
Yeah, I think you've touched on two really crucial bits of development for us there. So third-party apps, absolutely necessary. We need, you mentioned Mint before, for example. We would love some financial aggregator services to spring up in the UK that we could be part of. And mobile, of course, it's so exciting to see people showing their friends' Nutmeg portfolio on the iPhone in the pub. Hey, you've just invested in a cash ISA, check out what I've got, 50 different countries, a bit of Indonesia, a bit of Brazil. That's pretty cool.
All from your iPhone?
You can do that all from your iPhone, or hopefully from your BlackBerry if you've still got one.
Where do you want to be in 5 years' time?
Well, we certainly want to be global. I think that one of the reasons for coming back to the UK was to show that we could build a big company here, and the regulation allows us to move through Europe very quickly, as well as into other English-speaking countries. So, for example, Australia is a great market for us, Hong Kong's a great market for us, and we'll attack the US when the time is right. Our backers want to do that. They don't see this as a short-term project. It's going to be a long-term bit of work. So if we can spread Nutmeg and build a global brand, that's what we'd really love to do.
Thank you very much. Well, Nick from Nutmeg, thanks very much for talking to TechCrunch.
Cheers, Mike.